There's a lot of uncertainty around crude, but one thing for certain is the range that has been established. Lucan, what a ride it's been just even since the last session, trading just at $50, and we hit over 54 this morning. We've come back in a bit. That seems to be a pretty big swing for less than 24 hours.
Yeah, it does. We always talk about this, that as big of a commodity as crude is, it's global, it's fungible, that it's really volatile these days. And it has been volatile. But I think what's more important to look at is the price support we found in crude, which is right around 45, which you and I have talked about for several months now, which is right around what we believe is a break-even for production of shale. And as more rigs are going out of business, and shale is, I think, is really what OPEC is trying to fight against, it doesn't seem to go below there. So it's formed a decent bottom, if you ask me.
I think a big misconception is even though rig counts have come down, it doesn't mean that production cuts are taking place. And we're seeing that in many of the companies that have been reporting where they're actually increasing production. I'm not quite sure how the math makes sense there. But in your opinion, what do you need to do to get more constructive? Does it have to either to the downside break that 45, and where on the higher end to look to get back involved?
Yeah, I mean, you made a great point, right? Just because some of the higher margin producers are going out of business, that doesn't mean that people are producing less. And the example I'll give you is the Soviet Union. As the price of oil has calmed down and their dollar reserves have gone down, they're actually pumping more oil and try to send more to Asia to try to get more oil revenues. So what happens is when you start to have a price fight like this, there's actually a move to produce even more crude initially to try to keep up with your balances, and then after that everybody falls in line. So you're right, production globally hasn't gone down. The big marginal producers who are producing around 60, 75 break even have stopped producing. Now we have to see how the rest of the world reacts. And I think as far as a price question, we are going to look at oil right around here for another 6 months until there's some real consolidation. So I don't see a big rally up unless we have some big global macro event.
It almost feels like outside of a global macro event that the fundamentals are actually declining because there is more production coming online. So in your opinion, is this really just a technical trade at this point, and we're just going to kind of move it around within this range?
Yeah, I think for me, crude, the fundamentals are a little foggy right now, especially crude is usually really foggy for me in the short term, in the 2 or 3 month time frame. But the way I'm looking at crude right now is the numbers out of Europe and Asia, the Chinese numbers, whether they're slowing or not, and then the dollar is really important to me. The dollar, all commodities are priced in dollars, as you know, and how the dollar reacts and how the dollar moves, and also the euro, right? That's what I'm really looking at in relation to the price of crude and also the global stock markets. You'll see there's a fairly decent correlation right now. When the market goes up, crude goes up, vice versa.
Okay, thanks very much, Luke. We always appreciate the insight.
Talk to you soon. Thanks.
For TheStreet in New York, I'm Jill Malandrino.